What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of tomorrow's trading day, Wednesday, February 7th. Well, SPY here today up $1.43 in regular trading hours, about 0.29%, up just slightly here in the after hours. Listen here, as always, even if it confirms your bias, do take the after hours movement with a grain of salt. Why? That would be why. That volume is incredibly low. But let's zoom in here and take a little bit of a closer look on the 1 minute chart. You can see that after hours movement. You can see the candles get a little bit gappy. That is pretty indicative of low volume on SPY. Even happens on SPY, as surprising as that may be. What I do want to show you here, see this little bounce setup that occurred just about an hour after the market opened. This was actually very interesting. I ended up alerting a scalp to the group. By the way, you can get those at that link in the pinned comment if you'd like to join the Roensch Capital Gold server. I alerted a scalp, but I opted for the Qs. And the reason was because the Qs were actually acting slightly as the laggard. And in setups like this, I like to take whichever ticker between two related tickers that are lagging behind, because what you'll oftentimes see is, let's say SPY comes in for a test. Just really quickly explain. SPY comes in for a test and the Qs are following closely. What you'll oftentimes see is the SPY, in this example, might push through to allow the Qs to come make their psychological test of that level, okay, that so many people are watching because of a previous setup. And then you'll see them both bounce, except SPY ripping downside through forces you to take on slightly additional risk. I see that happen very, very frequently, which is why today I opted for the Qs. Just wanted to let you guys in on that, let you or explain more so why I prefer to do that. So let's take a look now at the 5 minute chart and look at volume. Okay, you can see here, first of all, the first thing that's incredibly clear here on the 5 minute is that 492 region, 492.25, acting as sort of a technical support level here today, but that's not really what we're after on this chart. Let's look more so at the volume. Of course, that opening candle has big volume. That closing candle, big green volume yet again. We're getting, not so much of a U shape here today, but something that sort of resembles that off of this tank off here in the morning. Call it a tank off, but really all it did was give up this little pre-market pump that we had in the couple of hours before the market opened. We gave that up, see? And then you look at volume. Volume actually was pretty consistent throughout the morning. Even when we started to bottom out here, we didn't see a big, huge change in volume. Just to explain, what we're looking for here is massive changes in volume on downside moves versus upside moves, or vice versa. Okay, because what we're looking for example, if we're bullish, we want as much volume as possible while the stock is moving upside, and then as little volume as possible while moving downside. And if we're bearish, then that flips, okay? The reason is because we want as big of a sample size as possible in the market, agreeing that our bias is the correct bias, and then when the stock, or the ETF in this case, is moving the opposite direction, we want that sample size to thin out as much as possible. All right, to leave as much room for error as possible, because we know small sample sizes can increase the probability of error. Let's now take a look at the more contextual charts for the day-to-day, like tomorrow, and take a look at these self-fulfilling prophecy indicators like the 50 period and 200 period moving averages. You can see here on SPY, the most relevant one here on the 30 minute chart is going to be that 50 period moving average, that white line. And you can see here, we're currently about 0.25% away from making a backtest of that level. But listen here, the 30 minute, really simple here tomorrow. If you're bullish and we see upside movement, in my opinion, we don't really have to worry so much about the 30 minute. We'll be more worried about the 4 hour and the daily. If you're bullish and we see downside movement, we just want to try to hold that 50 period moving average as well as we possibly can. Okay, now if we're bearish, right, if you are bearish, and we see a downside test, you clearly want to give this up as hard as possible, head down toward that 200 period moving average. Okay, and if we were to see that and you're still bullish, just hold the 200 period. Whereas if you're bearish, you'd ideally want to see that snap because it is only 2/3 of 1% away, and we know that we've seen that SPY and the S&P move over 1% in a single day on some days as of late. So that is within reason to take a look at that here. Let's now zoom out to the 4-hour chart. You can see here that this 50 period is really the most relevant thing here on the 4-hour. We will talk about this all-time high. I'm going to save that for the daily chart though. And you can see here, we are less than 1%, about 0.9% away from a test of that 50 period here on the 4-hour. So again, same deal here. If you're bullish and we see a retest of that, just hold that 50 period is your number one concern. And if we're bearish, ideally, you'd like to see us break that and ideally close beneath that, okay? Now, we have a big level to discuss, and that requires the daily chart. So let's zoom out here and then zoom back in and take a look here at the daily. That all-time high on SPY is very much so within reach. It's 496.05, and we have hesitated the last couple of days as we approach 500 on SPY, which is 5,000 on the S&P. Okay, listen here, 500 on SPY, 5,000 on the S&P, okay? Biggest test in years. It is. I'm not being dramatic. That is the biggest psychological test in years. So I expect that to act as a potential psychological area of interest, potentially resistance. But look here, if you are a bull, all right, and we're currently right around here, you know, 500 is a really big level to watch. It's currently about 1.2% away. So we're paying attention to it, but that's a big volatile day for the S&P. So our immediate concern, break all-time highs. If you're a bull, you're going into tomorrow looking at the daily chart or really any chart in addition to what you're looking at on the other charts, break all-time highs and hold them if you're a bull. If you are a bear. And then of course, if you're a bull, make our way up toward 500 or 5,000 on the S&P. If you're a bear, just reject off all-time highs, ideally. Even if we creep up into all-time high territory, you want to see a clear rejection, like the market's not comfortable to take us up toward 500 yet. That's what you're looking at here if you're a bear. So, I mean, listen, we're so close to that all-time high that really, I mean, in a very simple way, bulls, ideally, just a relatively sizable green day, and you're likely happy. Bears, since we're so close to that all-time high, any green day would likely mean, you know, or could mean a test of that at least, if not a break of that, you know. So, you know, bears, obviously, you'd prefer to see a red day here as we reject hard off of that all-time high. Okay, that's very simple, but that's very much so the case here tomorrow, just the way things are lining up. Let's take a look now. Actually, first of all, what I want to show you guys, look at implied volatility. Tanking off in comparison to the last like 2 or 3 months here. That's really interesting because that opens up the possibility for newer options buyers to really see some potential IV pump if we see implied volatility start to move back upside toward equilibrium. But also understand that if you own options here and you see IV falling, you're likely experiencing some IV crush. Not the end of the world as long as you're able to outrun it, but if you're seeing that, that would be the culprit right there. Okay, let's now take a look at the options traders' bias. Get a load of what they're thinking here as we head into tomorrow. 7.74 million total contracts traded today. Decent sample size here on SPY. Anything over 10 million on SPY, just for context, is massive. All right, 4.016 million calls, 3.723 million puts. So we are seeing a slight bullish bias in the overall culprit ratio. Short-term speculation, that's 0 to 20 delta, 1.25 million calls, 1.53 million puts. Actually a little bit bearish lean out of the short-term speculators. They don't seem to think in the very short term, when you average them all together, that we're going to reclaim that all-time high and get to 500. It seems like that's what they're telling us here. Again, that's simply the short-term speculators. Overall culprit ratio is still leaning slightly to the bullish side, and a lot of that is coming from that deeper in the money stuff. All right, that of course mid to longer term bets leaning bullish. That makes sense on the S&P. Hey, listen, before you head out, if you got value out of this video, please subscribe to the channel. I truly appreciate it. It helps out tremendously, and I'll see you in the next one.